as we looked into 2026, we might see the earnings cycle begin to improve somewhat. And in fact, we're looking for about 15% growth for the MSCI India index, which is pretty close to Nifty, but that's the index that we do all our analytical work on. And we've also done some detailed valuation work, which shows that India certainly is expensively valued at about 22 times forward earnings. But the various valuation methodologies that we've used suggest that that's roughly defensible. That's a sort of fair value given the longer term growth prospects and a few other methodologies.
Well, I think, first of all, our earnings will be very important. If you look at some of the tech names in India, they're doing quite well. And going forward, government is going to announce more and more reforms. I think the government is now coming to the realization that there's got to be a reform within the government itself so that investors can put money in the market.
So we have overweights on industrials, financials, and consumer discretionary, broadly speaking. And again, India's great advantage is it's still a young demographic, an urbanizing demographic, forming modern consumption patterns. It's quite an exciting story in that regard and somewhat unique amongst the large economies in the world. We like Asian defense stocks. I mentioned the broad overweight on financials, consumer discretionary, things like gold miners. But yeah, certainly some segments of AI capex as they affect Taiwan and Korea are remaining very strong, at least on our forecast horizon.